I think almost everybody in finance now understands there's something very big going on, and there's a general panic to get out of finance and into this new world. I mean, I get hit up by, you know, everybody from partners of Goldman to asset managers to everybody saying, how do we move to this world? So I think the force is unstoppable. It's the time that's unknowable. But as we know with exponential trends, they always feel slow, and then you look back and suddenly everything has moved. If you think of the exponentiality of what's happened in the digital asset market since, I went irresponsibly long back in, April, March 2020, right? That was a Bitcoin only world. Yes, other people were involved in other stuff, but then NFTs, DeFi, social tokens, DAOs exploded. This had all been around, and they were like, no growth, like this. And that's what's happening here. I don't know anybody in the financial space who's now not looking to get involved in some way, shape, or form. I've spoken to the biggest private equity firms in the world, the biggest asset management firms, the biggest banks, everybody. I've given presentations, endless presentations to, investment committees, boards, everybody about all of this stuff.
Do you think the recent volatility, downturn in prices, changes any of that, or at this point everybody's past worrying about that?
I think everyone now realizes it's a feature and not a bug, that you don't get exponential upside without high volatility. Just that's how risk reward works. And the question is do you get compensated for the risk with the reward? And a 50% pullback versus the multiple 100% upsides you get over periods of time shows that time and time again it is well compensated for. So I see no change at all in the number of queries and who I'm presenting to about this. I don't think any of these big investors even care about this volatility, because they need a volatile asset as well in this world, because bonds and other stuff are just non-volatile assets and they can't generate returns, and they've got pensioners who need to reach a hurdle rate and they ain't going to do it in bonds. So they have to take risk. They understand that. I think the traditional institutions remain because of how they operate within the space, the sources of capital, and how actually investors want a one-on-one relationship with the VC investor. But my guess is you will be a part of multiple DAOs in due course, where you are one of the people involved in that DAO, and that's how you'll think of your VC portfolios is, we've got 20 DAOs that we're investing in, that we're part of the discussion, where we're pulling together with other smart people. The Delphi guys are in this DAO, and Andreessen Horowitz are in this DAO, and we're all trying to solve this particular thing, and that's what we're investing in. And then you'll have your own portfolio of other opportunities that don't have this kind of shared structure, because sometimes it's your own view, and you want to back your own view. So I think it's going to be a hybrid, but what it does change is the economics of the industry, because it's so much easier to do via a DAO structure than it is via a fund structure. I think the US has to resolve much more like the rest of the world. Singapore, I think, has done a really great job of this. And I spoke to the chief fintech officer for Singapore and talked about regulation and how he thinks about it. I said, how are you dealing with retail regulation? And he's like, simply put, is we can't stop people. So what we have to do is give them warnings. So people understand that you can lose your money. Same as if you go to the racetrack and bet. They don't stop people. Why should they stop them investing? That's crazy, right? Betting is a probability game that's actually harder than investing, but people are allowed to bet. So they need to think this through and decide, okay, how do we warn people of the risk that they're taking, that they can lose all of their money, much like people are able to do on Robinhood with options. It's defined loss, but we can have defined loss in crypto. Smart contracts allow us to solve everything. So I think the US is going to have to adopt the same kind of methodology that Singapore has done and other countries have done. It makes no sense trying to perpetuate a system where the money flows has to go through the investment advisors, the investment banks, and stuff like that. You need to democratize that. And then you democratize capital. And that creates all sorts of opportunities. So I think the US will change. I think it's a generational battle in the US. And I think it's going to get fought by the millennials and Gen Z now being a much larger part of the voting. The issue is the senators and the congressmen and women are all boomers. Really, we got a few Gen Xers in there. That's it. So the generational shift has to happen. The problem is politicians are staying in office for longer and getting older, much like the population